All right, diving right in. Today, we're all about crypto. Using these sources, we're going to try to cut through the noise and figure out what's actually important.
Definitely. Sounds good.
So think big picture stuff. Regulations, how the market's moving, who's adopting crypto around the world, all that. We're not going to get lost in the technical weeds,
Right.
just the stuff you actually need to know.
Cool. Yeah, you've pulled together a really interesting mix of stuff here.
Okay, well, let's jump right into it then, huh? First up, this whole thing about stablecoins and regulations, or the lack thereof.
Yeah.
It seems like everyone's calling for clearer rules, especially in the US.
Especially when it comes to how stablecoins can work with banks.
Right. Because why is this lack of clarity such a big deal for crypto right now?
Well, think about it. When things are unclear, it pushes stablecoin issuers into kind of shady areas,
Hmm.
places where there's less regulation,
Oh, I see.
and that can make things risky. Remember, stablecoins are supposed to be like rock solid, tied to real currencies like the dollar.
Right.
But if they're operating in the shadows, it just undermines the whole point.
Hmm. Makes sense.
Plus, it scares away the big players, like
Mhm.
institutional investors.
Oh, right, because they need stability and trust.
Exactly.
Yeah.
Clear rules would make everything so much smoother, safer, and more attractive for serious investors.
Okay. That makes a lot of sense. So then there's the whole Ripple Lab situation with the SEC. They settled for 50 million, which, I mean, that's a lot of money.
Huge.
But it's less than the SEC originally wanted, all right?
Yeah.
So what does this settlement tell us? Like, is the SEC softening its stance on crypto?
Well, it's hard to say for sure. It's not like a total victory for Ripple, but it might be a sign that the SEC is willing to be a little more, what's the word?
Flexible.
Yeah, flexible, maybe a bit less aggressive. And that could be good news for other crypto projects facing scrutiny.
So it sets a precedent, kind of?
Yeah, exactly. It could lead to clearer guidelines for the whole industry.
Okay. Well, let's shift gears a bit and talk about the market. Bitcoin took a dip recently, down to like $82,000, and that triggered a bunch of liquidations.
Yep, over $300 million worth.
Which, just to remind everyone, is when traders basically get wiped out because they borrowed money to make bigger bets.
Right, leveraged positions.
Leveraged positions, right. So it seems like this dip is connected to all the economic worries we're seeing in the news, like consumer confidence is down, recession fears are up.
All that plays into it, yeah.
Yeah,
When investors get nervous, they pull back from risky assets, and crypto definitely falls into that category.
right, right. Okay, but on a more optimistic note, there's this well-known crypto trader who's predicting a Bitcoin boom. And get this, he says it'll happen if the Federal Reserve cuts interest rates.
Yeah, he's been right before, too. Called that surge back in March when Bitcoin hit $84,000.
Wow. So what's the logic there? Why would cutting interest rates boost Bitcoin?
Basically, when interest rates are low, traditional investments like bonds become less appealing. They just don't offer as much return.
Yeah.
So investors start looking for other places to put their money, something with more growth potential, and that's where Bitcoin comes in.
Interesting. And because Bitcoin's kind of the king of crypto,
Totally.
if it goes up, the whole market could follow, right?
Exactly. It often has that ripple effect. But, there's also the other side of the coin. We're seeing negative flows from Bitcoin ETFs.
Oh, yeah. What's up with that?
That means institutional investors are pulling out more money than they're putting in, at least in the short term.
Huh. So they're cautious, even with this potential boom on the horizon.
Yeah, it seems like they are. Maybe they're worried about the current economic climate.
Okay, so we've got this mix of signals, positive and negative. Now, let's talk about adoption. This story about that small town in Argentina is crazy.
Yeah, 16,000 people signed up for a crypto exchange.
That's like 1 in 5 people in the entire town.
It's pretty remarkable,
It really shows you how crypto's catching on around the world.
especially in places where traditional finance isn't working for people.
Right, like where there's economic instability or it's hard to get access to banking services.
Exactly. Crypto can offer a way out.
Okay, and then there's this whole thing with, Trump's World Liberty Financial.
Yeah, they're launching a stablecoin called USD1.
USD1, right. And they've got plans for more stable coins, even crypto ETFs. They're partnering with Crypto.com for that. It's pretty wild to see a figure like that getting involved in crypto.
It definitely brings a lot of attention.
For sure. It makes you wonder, how much influence can someone like that have on the mainstream adoption of crypto?
I think it could be significant. You might bring in people who were on the fence before or who didn't even know much about crypto.
Right, right. And finally, we have this ranking of cryptocurrency exchanges. It looks at things like fees, security, and how user-friendly they are.
Really important stuff for anyone thinking about getting into crypto.
Yeah, for sure. So why is it so crucial to pay attention to these factors when you're choosing an exchange?
Well, it's all about practicality. You want to make sure you're not getting ripped off with high fees.
Right.
You want to know your funds are safe and secure. And let's be honest, nobody wants to use a clunky, complicated platform.
True. So stepping back for a minute, we've covered a lot of ground here.
We have.
We've got regulatory uncertainty, a market that's reacting to all sorts of economic news, influential figures jumping into the game, and real people adopting crypto all over the world.
It's fascinating to see how these things all connect. Like, what happens with regulations directly affects the market.
Oh, I see.
And that influences whether individuals and institutions decide to get involved with crypto.
So it's all intertwined.
Definitely.
Well, that brings us to our final thought for today. Considering all these forces at play, the regulations, the economy, the actions of these high-profile players, how do you think it'll all shape the future of crypto? Will it become more accessible for everyone? What single factor do you think will have the biggest impact in the next year? That's something to think about. Thanks for taking the deep dive with us.
You're welcome.
All right, that's it for today. See you next time.